weekend, all. And happy birthday, America. Yeah, it's our 4th of July, Independence Day tomorrow. Very important. Today is Sunday, the 3rd of July, 2022. I'm going to start this off by telling you about a 2-for-1 special I have. Buy any of my research products, in other words, a subscription to my Spider ETF, a subscription to the morning futures, or a combo subscription, or a full subscription to my written updates as well. And you can give 2 for 1. In other words, you get one and you get one to give away free to your friend. If you buy a 1 year, they'll get a 1 year. If you buy a 1 month, they'll get a 1 month. 2 for 1, it's going to end this week, so you might want to take advantage of that. How do you get it? It's actually pretty simple. All you do is click this link. Follow me. There'll be a link up here. I'll leave it on throughout the whole video and just run with that at that point in time. So pretty simple to do, and I think you'll find it interesting. So let's talk about the markets, and let's just go right to pricing. First, in stocks, this is your weekly bar chart. Nothing looks very good on that chart. Look at how the semiconductor ETF has just literally come apart. Now, I keep reading about shortages for cars, but other products, it looks to me like supply chains are filling up in a number of areas, warehouse certainly filling up. When I look at this, I mean, you do realize how much this market has come down. This is not a small drop. This is a market that was over $550 and now it's under $350. That's a big time drop during this whole crisis. So how much shortage is there really? I mean, otherwise, why are prices down this much? Possibly the market's building in a recession, saying, hey, so many of these goods aren't going to be bought any further, that while we get a chance to catch up, like for automobiles, other products, how many waffle irons do you need? How many of this do you need? If there's a chip used in it, and most things that are electronic do, that's what's hurting it. When we take a look at it, you can see how you're coming down. The 200-week average is down here. That could be one support, but you're at the first one. Each time we have hit Bollinger Bands, it hasn't paid off to try to stay short under them. You generally get a move to the right. Now, because it's an outside week down, what I wouldn't want to see taken out if I were pressing the short side is taking out this week's high of 378.44. That could lead you up here. On the other side, the bear side, you just had a bearish crossover, where if we take a look at this market, you just saw the 18-week get under the 100. That's bearish as can be, another leg to the downside, and momentum still pointing downward, could even embed now. So bearishness. KBE, you're down and holding an attempt at least, the 200-week average. You had the combination here of the Bollinger Band. You bounced away. You tried to close under the 200, couldn't do it. But you've got your embedded reading. I think the pros are selling this market short, and I think there's another element coming here that's terrible. I think that the 18 weeks is going to get under the 100. So another bit of a crossover happening and bearishness there. In the XLI, you went down 2 weeks ago, went for the lower 200-week average in the Bollinger Band, and you bounced. Momentum is still pointing down, trend down, and again, here, the whole market's gradually doing this. Pay attention. You're getting another bearish crossover of the 100-week, 95.72, the 18-week in red, 95.72. Probably when we reopen Tuesday morning, it'll be under 95.59, another bearish crossover happening there. On the energy sector, the market peaked against the upper Bollinger Band. I wish I could tell you I'm surprised. I'm not. That's what I teach normally happens. And you lost the embedded reading at the same time. That dropped the market. Now, it didn't even pay attention to the 18-week average. So if it's going to continue this decline, it's probably headed to 68.26. On rallies, the first resistance should be the 18-week. We don't have a clean trend here. We have a vertical price break because of the size of it and what it did. It's come from 93.31 down to 72.58 like that. A $20 break happened, in 3-4 week period, very, very fast. SPY, be careful. Getting ready to see another bearish crossover through here. I think rallies will be sold by the trade into that area. In GLD, pressing on, probably going to the lower band at 165.82. The resistance on rallies is 172.30. You have to get over that number to convince me to be anything but in the bear camp. And this 100-week average, it will drop a fraction when we reopen Tuesday morning, because you're going to drop some values back here, and you added this lower value, so that'll pull the weighting down. In GDX, you're running now the lower Bollinger Band. That's a bearish sign. Momentum still down, showing no signs that it wants to stop with that, so problems there. ARK hasn't been able to get yet out of its own way. And I realize it's got investors plowing in, and they believe in Cathie Woods and what she's doing. I got to tell you, friends, if this looks to me like what the term a dead cat bounce, that it's got no leg to it. And if it doesn't and it starts down, it's going to get painful. The next stopping spot's 32.23. If the market's good, it's got to get over 46.94 to prove that it's got anything good going, and then I can open up the door for the 51 level. In Apple should have resistance right here. Now, each week that goes by, we get closer and closer to the liftoff. I know there are deals galore going on older Apple phones. I just had somebody call me and they said, Ira, you can get a new Apple 12 for $300. Wow. Verizon in one of their giveaways that they're doing, $350, I think is what they told me. That's darn cheap. You know, a lot of people don't mind getting with those. Then I look over here at Tesla itself. Tesla's still coming down, and Mr. Musk has shown up again. I understand he met the Pope this week. I hope he's talking about Twitter. Where is he on that? You know, we don't know what he's doing, and the value of the stock has certainly come down from the 1152.87 almost in half here. It's 681.79, so a heck of a big decline in that market. THCX, you know, I don't want to cover it on the dailies, but on the weeklies, still looking terrible. Is it going to zero? It's not, but you understand what I'm saying. It's just a terrible looking chart. Now, keep your eye on bonds, BND, AGG, TLT. Why? The reason for this is fairly simple, actually. As we and other economies, the Western economies, take their hit and things are dropping down, and every reading we're getting is just worse and worse. I think you've been watching, I hope, seeing that. The market's starting to say, we have been pricing in that the Fed's got to get super aggressive well into 2023, but the market is doing the Fed's job for it in the sense that the slowdown in the economy is happening. So if we get inflation measures that start slipping away because people stop with the demand for the markets, happens is employment levels off, which it's done at the 3.6%, and starts creeping back up, and goods inflation is relatively high and people back off from buying certain things, watch out. I was looking at the prices like you are for what it's costing me today. We're having our July 4th party, and it's expensive. It's certainly up 30% probably from what it would have been a year ago. You know, I'm just looking at the price of the drinks and everything else that we've got, the ribs, the meat and all, expensive. So if that's the case, what happens is you start a rally as the market says, hold on, we discounted too much. And the futures have been climbing in the 5, the 10, and the 30-year bond. Keep your eye on that. Could be what the market is saying, that the market's going to reprice in, that we don't have to get quite as aggressive. It may even be that if the market starts seeing some leeway in September, we don't get a 75 basis point hike, we might get a 50. The Fed's not going to stop. Don't assume that. Do they have to go far into 2023? Probably not. If inflation abates, and that's going to be the big thing, because they're fighting one thing now, folks. They're fighting inflation. They have employment strong enough where it can go up a half a point. They're not worried, and they are not going to worry about a recession. They'll try to walk the line, but they'd rather bite inflation, in other words, have to deal with that, than run away inflation that they can't get their arms around. Not even a battle they'll think about. I'm Ira Epstein. I want to remind you the 2-for-1 special. Just take your cursor, move it up there. You'll see the icon, give it a click, and away you go. Have a good day. I will see you all Tuesday with the market wrap-up. Take care now.